Thanks, Satish. So as we look into 2026, helium remains central to our industry's future. It connects every part of our supply chain. So to share that insight today from across the global helium market, we're joined by Phil Kornbluth, founder and president of Kornbluth Helium Consulting. With more than 4 decades in the business, including global leadership roles at BOC and Matheson, Phil is one of the industry's most respected voices. We're just thrilled to have him here today. Please help me in welcoming Phil with his perspective on the dynamics and opportunities shaping the global helium landscape. Thanks.
Thanks, Maria. Here's the clicker. Okay. Good morning, everybody. Nice to this is a new crowd for me. I know a few people here, but not everybody, like a lot of some of these other venues I might be at. But yeah. Oh, sure. Okay. I thought I might not even need a mic, but I guess I do. Okay. So Maria already introduced me a little bit. You know, I have my one obligatory intro slide, but I've been in the helium business for 44 years, or 42 years. Been in the gases business for 44 years. So I'm a BOC guy. Maybe some of the older people here remember who BOC was, but it was British Oxygen. They were one of the leaders in the gas business until Linde acquired them in 2006. And you know, I've been in this business for a long time. I ran the global helium business for BOC and Matheson, and I've been a full-time consultant for the last 10 years. And you know, again, it's a magazine that probably nobody in this room knows about, but I'm on the editorial advisory board for Gas World magazine. There's a couple of people over there who know about it, but that's the main publication for the industrial gas business. And you know, I guess I think I'm, you know, one of the leading content creators. What that means is, you know, writing articles for, or doing interviews or things like that to try to get the real story about the helium business out to the public. And there is a lot of BS being spread around by, in particular, a lot of these helium exploration startups who, you know, there's like 25 publicly traded little helium exploration companies. They're constantly trying to raise money. And how do you raise money? Well, you know, you want to have you want the world to think there's a big shortage and demand's growing by double digits and all that. So there's a lot of misinformation out there on the internet. So I will try to correct some of that for the next you know, half an hour, 45 minutes. I know Maria has me on there for an hour. I don't know that I have an hour's worth of stuff unless you guys have a lot of questions when I'm done. Okay, so I'm going to start with 2 slides that are just going to be fundamentals about the helium business. I thought for this crowd, probably the majority of you wouldn't know some of this stuff, so I thought it would be a good way to start out. So probably most of you know that helium is a natural gas byproduct for the most part, right? It's all comes out of the ground. It's either a byproduct of natural gas processing or LNG production, increasingly. Most of the newer sources are LNG production. And then you have all these little startups that are, you know, producing all this media stuff. They account for less than 5% of the world's helium supply. Their helium comes out of the ground too, but a lot of some of these newer companies are drilling for gas that doesn't have hydrocarbons in it. So they refer to themselves as green helium or primary helium producers, but it's a really small part of the market at this point. Most helium is produced as a cryogenic liquid. Again, I don't know if you folks know that, but most of it is purified, then it's liquefied. It gets put into an 11,000 gallon tanker that you might have seen going down the highway and not even realized what it was. But most of it goes around the world as a cryogenic liquid. The reason for that, the payload as a liquid is 5 times plus what it is in gaseous form, so it's cheaper to ship in liquid form. Also, some of the applications actually require liquid helium, like MRI in particular. So it's much easier to liquefy the helium in a central location and then ship it around, as opposed to shipping gas around and having small liquefiers all over the place. And also you can get higher purity. So some applications like delivery of liquid helium, even if they use it in gaseous form, because it's higher purity than gaseous helium typically. So that would be somebody like a semiconductor chip manufacturer, somebody like that. There's only 19 of these bulk liquid helium plants around the world, so it's a relatively small number. 8 of them are in the U.S., and the rest are places like Qatar, Algeria, Russia, some of the pretty remote places that I've been to over the years chasing after helium. So I have had some travel adventures that have been pretty interesting. The business is an oligopoly. Most of you probably have some awareness of that. There's depending on what day of the week it is, 5 or 6 big players who still have a pretty strong hold on the business. But I will talk about how the oligopoly is really starting to fray. When I started in this business, it's a long time ago, but it used to be a 3-company oligopoly. It was our BOC, Air Products, and the Linde division of Union Carbide back in those days. And we controlled, close to 100% of the world's helium supply. I mean, the only helium we didn't control was what the Bureau of Land Management sold in Texas. So it was kind of different. I mean, that was like we really controlled the business back in those days. And now it's, like I said, the oligopoly is fraying. And those logos on the right, those are the companies that are in the oligopoly. They're names that are probably familiar. Air Products, of course, I think everybody's heard of. Air Liquide, they own Airgas, so you've heard of either Air Liquide or Airgas or both. Linde, German company. Messer is a German company. The Nippon Sanso, which you would know as Matheson, probably in the U.S., but they're changing the name worldwide to Nippon Sanso. They're the owner, and another Japanese company, Iwatani, and they're they're listed in order. So the top 3 are the big 3, and then Messer and Nippon Sanso are quite a bit smaller than the big 3, and then Iwatani's quite a bit smaller than the other 2, but they're bigger than everybody else, so they're on the list. There are exploration companies in North America that are producing high purity crude helium, or some people call it balloon grade. That's anything greater than 97.5% purity will lift a balloon. And some of those companies are selling gas directly into the balloon market. So those are potential suppliers to folks in this room if you are big enough to buy tube trailer quantities. None of them are filling cylinders yet, I don't believe, but they are filling tube trailers. So let's see. I got one more slide of fundamentals. So there's about 50 liquid helium transfill facilities in the U.S. So a liquid helium transfill is where bulk liquid is delivered, and then it is transfilled, and it's runs through a vaporizer and a compressor to fill tube trailers or cylinders, or they fill liquid dewars that might go to top off an MRI scanner. So that's what happens at a transfill. It's really it's a bulk breaking facility essentially, and so they're all over the place. Basically, there's multiple transfills in the larger metropolitan areas, and then they're scattered around pretty well. There's about 450 independent gas and welding distributors. There's a couple of them are represented in this room, but there's a lot of them, again, all over the place. Just a couple of numbers that I'm going to throw at you, a few numbers. So the worldwide demand for helium is about 6 billion cubic feet. Effective capacity, that means after you factor in outages and all that other stuff, is about 6.8 BCF. So there is more capacity than demand right now, but probably the market's behaving like there's a bigger oversupply than there is, but there is a plentiful supply and a little bit of surplus right now. The biggest application for helium is semiconductor chip manufacturing. That's around just under a quarter of demand and growing. MRI is about 19%, I think is the number I had on there. I don't have the number on there for MRI, but MRI is the second biggest application. It says 20 on there, and is shrinking. Okay, and the reason it's shrinking is because the new generation magnets require a lot less helium. Now it's the installed base of MRIs, which is many thousands around the world. They're still, they're still there. It's not like they're being thrown out in the garbage to be replaced by the new ones. So the installed base is still there. To some degree, some of the installed base gets relocated to a third world country or something like that before they get retired. So the replenishment market, the MRIs have to be topped off periodically. That's still growing, but not very much. But the MRI demand, the helium demand at the magnet manufacturing facilities is where the demand has really dropped because they put in recycling capability and things like that. About 42% of capacity is in the U.S. That's a big number. We're still the leading helium producer, but it's a lot smaller number than it was back in the day. There was a time when the only helium plant outside of the U.S. was a little plant in Poland that's still operating. So it really was a completely U.S.-dominated business, which it's not anymore. About a third of global demand is in the U.S., so we're still the biggest market. And about 15% of U.S. demand is for party balloons. So it's the number 3 application in the U.S. And my guess is it's about 10% of global demand. And the reason for that is there's more disposable income in the U.S. And generally what you see with party balloons is there's more demand in the more affluent, developed economies. So the U.S. probably is, I would guess 15% of U.S. demand is probably the biggest number in the world, if I had to guess. And then another thing that is unique about this business is that pricing information is extremely opaque. Okay, you can't look it up anywhere. It's just not available. The only publicly available pricing information, and it requires a fair amount of interpretation, is national import and export data. That's the only place you can go to, go into find it in the public domain, and you got to go pay for it. So it's really hard to get pricing information, and you need to talk to an expert or somebody who thinks they're an expert. Okay, so where are we in the commodity cycle? So this is where hopefully it starts getting a little more interesting for folks in this room. So most of you know about helium shortage 4.0. It was a 2-year kind of thing. It lasted pretty much through all of 22 and 23. There were multiple reasons for the shortage. The biggest one was the U.S. Bureau of Land Management pipeline system was shut down for like 6 months. But there were other outages that contributed to that. And another big thing was the startup of a plant in Russia, Gazprom's Amur plant. It started up briefly at the end of 2021, and it was going to end the shortage, or it was going to create plentiful supply conditions in 2022, kind of like we saw in 2024, and then they blew the thing up. Actually, I kind of regret. I have a really good video. It's a slide that shows the explosion live. It must have been from the control room. There must have been a cam in the control room, and you're looking at this huge plant. It looks like a big refinery, and you can actually see a little cloud of gas that's emerging in the plant. And then it looks like you see a spark, and it goes boom, and everything blows up, and you hear a bunch of Russian guys saying whatever they're saying. Oh, holy shit, whatever it is. But it was it's pretty impressive, and they blew up a major multi-billion dollar kind of thing. So anyway, it took them 2 years to rebuild it. That plant eventually did start up at the end of 2023. and that was one of the reasons that the helium shortage 4.0 came to an end. The other reasons were the chip industry actually had a slump in 2023, so the demand from the largest application was down. But the other thing was, I don't know if any of you have heard the term demand destruction, but demand destruction is, typically when prices go up for any commodity, all other things being the same, demand goes down. Why does it go down? Well, people who are tired of paying too high a price for helium put their engineers to work and they figure out how to recycle it, or people plug leaks, or people substitute helium for another gas for helium, or there's some technological advance with MRIs becoming more efficient. So all of these things, what I've seen, through these 4 shortages is that if you have a shortage that lasts 2 years or 3 years and prices go up a real lot, people get smarter about how to use helium, and demand goes down. So anyway, the shortage ended by the end of 2023. We've been in a period of plentiful supply for almost the last 2 years, despite what some of the press releases from these startup companies say. But I think all of you probably you're experiencing that nobody's allocating your helium supply, and it's easier to get it. Maybe you have more people trying to knock on your door to sell you helium, things like that. So the shortage is definitely in the rearview mirror. Prices have come down quite a bit during 2024 and so far this year, but they're still at pretty high levels if you go back and look at what they were before helium shortage 4.0 or before helium shortage 3.0. So, the price of helium at the source, so what people pay Exxon or Qatar Energy or people like that, that price went up by 11.3% per year compounded between 2006 and 2023. So there's not many commodities that have that kind of a sustained price increase over that many years. So it's people have made a lot of money on producing helium in recent years. Despite the plentiful supply, oversupply, there's still some price increase activity in the market, especially some of the majors. They really imposed one-sided supply agreements on a lot of their customers that gave them the ability to try to raise prices pretty much risk-free with we call them open escalation contracts. And there are places where even in a market where prices are going down, there is scattered price increase activity here and there. Demand growth for helium has been modest. And then, the important comment at the end is that we are in a strong buyer's market right now. So, for the last 20 years, most of the time we were in a seller's market. Not all the time, but most of the time. But clearly we're in a buyer's market now. Okay, so what happens from here? Well, what happens from here, if I look into my crystal ball, I don't have a crystal ball. There's kind of 3 scenarios, okay? And the baseline, when you look forward, says there should be plentiful supply, all right? But the 3 scenarios that I would point out, and I'm going to jump ahead to that little sub-bullet there. There's 3 big projects in the works right now. There's a second Gazprom plant called Amur 2 that is mechanically complete and ready to start up. They don't have any demand for their helium, but the plant's ready to start up. There's another plant in Qatar. They call it Helium 4. The rest of the world calls it Qatar 4. And that could start up as early as 2028. And it's really big. 1.3 BCF is a lot. And then there's one big project in the U.S., a company called Blue Spruce Operating, is right next door to Exxon, basically, that they're trying to build a plant that would produce about 800 million feet a year of helium. And again, those numbers, keep in mind, supply, we said, is about 6.8 BCF now. So 600 million feet, that's almost a 10% increment to supply. Blue Spruce, more than a 10% increment to supply. Qatar 4, a pretty big increment to supply. So what's going to determine the next 5 years is whether these projects go ahead as scheduled or whether they get delayed or even canceled. So I guess I would say my most likely scenario, I'm calling it rational behavior, that's that some of the new supply in the pipeline gets delayed or canceled, or they're unable to finance it or whatever it is due to insufficient demand, and the market kind of finds an equilibrium close to where we are now, where prices are still going down. There's still pressure on price, but they're not going to go like that. They're not going to go to nothing. The next scenario, I'm calling it race to the bottom, is that all these new projects go ahead. The Gazprom says, well, I already built this plant. I'm going to start it up. And Qatar Energy says, well, my LNG plant's going to be built. I'm going to have this helium byproduct, so I'm going to produce it. And Blue Spruce manages to raise $1.5 billion, which is what their project's going to cost. If all those things happen, it's going to be a really messy helium market. Not necessarily bad for the people in this room. You'll be buying cheaper helium and you'll be marking it up and making money. But it's a bad scenario for like the Air Products and Lindy's and Air Liquides and all those kind of people. In that scenario, the race to the bottom scenario, we would have capacity utilization in the, let's say, mid 70% range for probably 4 or 5 years, which, it doesn't sound all that low, except we've never gone there before in the helium business. We've never been below probably about 85%, And then the third scenario that I'm also giving a 25% probability to, I'm calling it recurring black swans. It's just to say, well, the fundamentals look like there's going to be plenty of helium around, but stuff is going to happen just like it has in the last 20 years, whether it's a war in the Middle East that somehow cuts off Qatar from the market, or a big source blows up, or who knows what. But something, it's a complex supply chain, and stuff happens. And it could be that we start out with that rational behavior scenario, and then something happens, and we end up in the recurring black swan scenario. So it's hard to predict the future, but I would say that the baseline going forward is for plentiful supply, and so it would take something pretty big to go wrong to throw us into a shortage again, which is different than the last 20 years when the baseline was supplies tight, and if something goes wrong, we're going to end up in a shortage. So it looks more optimistic going forward for supply. All right, so a little bit more about the folks in this room. So again, I said that helium is plentiful for any and all applications, including party balloons, and is expected to remain so. So for that reason, the advocacy groups arguing that helium should be conserved for more critical applications, they've quieted down. I think they've quieted, unless you guys are seeing something differently, but the American Chemical Society and the American Physical Society and these folks who, want to conserve all of the helium for their precious experiments at their labs and stuff like that. And I don't mean to downplay that, but they have the attitude like, well, I want it all, so you can't have any, kind of thing. And that's they have quieted down. And I would just say that the whole story that the helium is a scarce commodity and it's whatever, that's BS. The world has lots and lots of helium in the ground. We have had shortages. Obviously we've had shortages, but the shortages have been really caused by the fact that most of the helium is produced as a byproduct. And so when you need more helium, you're not going to go out and invest billions of dollars to build an LNG plant so you can get the helium. So the helium availability generally has been dependent on somebody else making a really big investment upstream of you to give you feed gas to build a helium plant. So that's why we've had these shortages. But there's no shortage of helium in the ground, and that's just a false narrative. And again, relative to what this group is trying to do, I can't comment too much on the environmental stuff, but as far as the argument that helium that using helium for party balloons is a frivolous application. It should be kept for MRI and aerospace and all that kind of stuff. That's BS. There's plenty to go around, and that's an easy thing to shoot down, when you try to put together position paper or whatever it is. Party City's bankruptcy has created opportunities for other retailers to increase their party balloon and helium sales. So I'm sure some folks in the room are involved with that. And folks are who are already in the business are trying to pick up Party City's former customers. And then of course environmental issues continue to be a concern that you guys are faced with, especially in coastal and environmentally sensitive areas. So I think that's probably, my personal opinion is I'm not saying that it's nothing, but I think it's an exaggerated concern. And I do think that, I'm not taking a side with the, for either side of the politicians, but I think that this is an issue that local politicians are able to agree on at times when they're not able to agree on anything else. So it's like, well, look what we did. We banned balloon releases or something. Anyway, so nobody's asleep yet, right? I'll keep going if... So I'm going to talk a little bit about some of the trends impacting the global helium market, that these are like macro level trends, and then I'll talk a little bit more about three of them that are a little more relevant to this room. So one of the things that's been going on in a big way is tier 2 gas companies, smaller gas companies, whether they're full line gas companies or distributors or whatever. Tier 2 gas companies are gaining direct access to supply. So everything doesn't run through the majors anymore. Partly, there's a few reasons for that. One is that some of the big producers, they didn't think they were getting a fair share of the pie during these shortages when their customers were raising prices to the moon and they were stuck in their contract. And they said, this doesn't feel right. Maybe we ought to try to cut out the middleman here. So some of the people like ExxonMobil and Qatar Energy are more willing to sell directly to smaller gas companies. And the other thing is you have these startup companies like North American Helium and Thor Resources and Desert Eagle and various companies like that who have come into the business with generally small production plants in Canada, the U.S., and they don't care if you're a helium major or a helium miner or an independent. They just want to sell to whoever offers them the highest price. And they are undermining the majors in that let's say the majors are losing their control of pricing because these guys are coming in and they don't really care about the majors. So I've kind of been implying, the helium oligopolies fraying at the edges because there's more competitors now, more competitors for the source and more competitors for the customer. The helium business is becoming more regional and less U.S.-centric. Well, all right, the regions are more about, we've got the war in Ukraine, we have sanctions on Russian helium. So the regions are more about companies who are in countries that can buy Russian helium and countries who are prohibited from buying Russian helium. So it's used to be one big global market. It's kind of like it's definitely more regionalized right now. China is developing their own independent helium ecosystem. So, again, it's interesting. This is a little bit of a comment on sanctions. I'm generally like an anti-sanctions person, but the reason I'm anti-sanctions is that the people who are getting sanctioned always seem to find a way to work around the sanctions. So again, it makes good headlines for the politicians, like look how tough we're being on Russia or whatever it is. But if they're getting all their oil to market and getting all their helium to market, you're not really accomplishing anything. So in this case, China, if you follow the news, China has been using their control of rare earth minerals for leverage against the United States in trade negotiations recently. Well, it wasn't that long ago. China imports 85% of their helium. China used to be dependent on people like us for their helium, but because of these sanctions, all the Russian helium is flowing into China. China doesn't. There's no U.S. helium going into China anymore. So all we've done is we've removed what might have been a point of leverage for the U.S. with China. It isn't a point of leverage anymore. They don't need us anymore. I mentioned the proliferation of the helium exploration startups. I'll talk a little bit more about that. We are seeing increased development of private helium storage. So Air Products and Linde both have built storage caverns for helium on the Gulf Coast, and Air Liquide has one in Germany, and Messer has the BLM facility. So, what's significant about that? Well, the significance is if you have helium stored in the ground, when there's an upset in the supply chain, you can bring it out of the ground and not immediately have a shortage. By the same token, when there's an oversupply, instead of having to dump everything into the market because you have to meet a take-or-pay obligation, you can put it in inventory. So it is something that should cushion the swings a little bit going forward. It'll be harder to create the conditions for a shortage, and maybe the extremes will be a little less. And then, I mentioned briefly this green helium or primary helium thing that some of the startups are promoting, but I would say that I put that in the BS category because I haven't met my first customer for helium who's willing to pay a nickel more for green helium or primary helium. So again, it's an effort for some of these startups to appeal to ESG investors. Let's see, ESG, environmental, safe, social, and governance, or something, right? So the ESG investing was in style for a while, but since Trump became president, the Trump administration is saying BS to that. So anyway, it's about attracting investment money as opposed to meeting the needs of customers who are demanding green helium. All right, so a little bit more. As I still have lots of time to fill. So anyway, the tier 2 gas companies gaining direct access to supply. So again, the headline I already talked about, but why are they doing this? Well, they got tired of all the allocations. Every time there's a shortage, their supplier declares force majeure, implements an allocation, and raises their price. And they said, we don't like this, so let's do something about it. What they could do about it is try to buy directly from the producers. It required them to acquire 11,000-gallon containers in many cases, so they had to make investments because usually they relied on the helium majors to provide the 11,000-gallon containers. And their objective is to have lower cost, more reliable supply, and independence from the majors. So a number of companies have achieved that. And I mentioned the startups are just selling to the highest bidder, and that major producers have been more willing to sell to smaller gas companies. So what it means again for this audience, more supply options, right? I mean, that's what it boils down to. There's more choice. More people want to do business with you. The whole oligopoly fraying at the edges. It used to be that the helium majors owned all the containers. I mean, literally, just about all of them. So again, more companies are buying containers. They're buying directly from producers. They're increasing the competition for sources and customers in some segments of the market. So, and as these things, this last slide, they're interrelated, right? I mean, it's kind of obvious that these trends are kind of working together to change the market structure. What I would say is that again, the largest and most complex end users are still largely the domain of the helium majors. So, a big semiconductor fab that has extremely stringent purity requirements, and they're buying all kinds of electronic specialty gases and things like that. There's not a lot of tier 2 gas companies supplying chip manufacturers. You can say the same thing about the aerospace industry because the aerospace industry has very erratic demand. They need several 11,000-gallon containers delivered at the same time, and then they don't need any, and then they need several, and it's or they scrub a flight, and it's hard for a little company to deal with that. But again, the more supply options for end users, same thing. Okay, this is I mentioned the extreme increase in price at the source for helium over the between 2006 and 2023. This is what we're representing here is large quantities, long-term contracts. So this isn't retail prices or end-user prices, but this is what the Exxon type prices to Linde kind of thing. Not many commodities have that kind of a increase in price over a sustained period, and that's why we've had all these startups coming into the business, because they said, wow, I can drill for gas where helium is the only commercial product, and I can make a bunch of money on that. I can throw, usually we're talking about gas that's 99% nitrogen and other miscellaneous stuff, nitrogen, CO2, whatever, 1% helium, maybe not even 1% helium, and they can drill for that, explore, drill, build a plant, throw away 99% of that gas, and produce the 1% helium. And where prices were in helium shortage 4.0, they could make a lot of money. They're getting squeezed a little bit now because prices have come down quite a bit. But anyway, so we have all these startups, at least 60 exploring for helium in the U.S., Canada, South Africa, Tanzania, Europe, Australia, Morocco, quite a lot. Most of the companies are not producing helium, and most of them never will. They are producing a lot of press releases, though. Okay, and if you actually charted their share prices since the ones that went public, most of them haven't done very well. A small number of them are actually producing helium and have developed what I would call a sustainable business model. The North American Helium in Saskatchewan is producing around 235 million feet a year now, and from 10 small plants. They're a real company. They're privately owned. They're still so they don't do a lot of press releases, but they're a real company. They're doing well. Capital Operating Group in the U.S. has a plant in the Four Corners area with another one ready that's just in startup right now. Desert Eagle is another company that's in Colorado. Thor Resources in Canada, Canadian Helium in Canada. Cimarron Midstream, which used to be IACX Energy. So, there are companies who are producing helium. Most of the startups in North America are producing balloon-grade gaseous helium filled into tube trailers. Now, some of that is going directly into the balloon market. Most of it is being trucked to a helium liquefier in the States and turned into bulk liquid and being sold as bulk liquid. So, but again, they're producing to that mostly 98%, 99%. The reason for that is two reasons. As I said, number one is if you have a tube trailer that's filled with a bunch of nitrogen, you're not going to have a whole lot of helium because the nitrogen's a lot heavier than helium, and you bump up against the weight laws, so you'd have a really bad payload. So you want to have higher purity to maximize your payload, but the magic of 98 or 99% is you also want to be able to sell directly into the balloon market if there's demand for it. So that's why they're producing to those levels. All of these companies, and they're a big part of driving price down, to be honest. But these companies, they build a plant, might be producing 20, 30, 10, 20, 30 million feet a year. They're obviously highly motivated to sell at the plant capacity at whatever price they can get. Now, the mentality, and this is the mentality that's been in the business for a long time. The mentality has been, if I can produce helium, I can sell it. Customers are going to beat my door down, trying to buy this helium. That's not the case right now. There are people who could build a plant and find that they don't have anybody who wants the helium. So I do think that they need to be a little more cautious, and maybe they ought to try to sell their helium first before they build the plant, because they might end up with a $20 million idle plant. Again, depending on the location and your location and whether your volume is big enough, these companies should be considered for helium supply. And I know when I get involved with helping some of these companies sell their helium, I do include some of the smaller gas companies on the RFQ list typically. And sometimes they bid, sometimes they don't, but they're included. Okay, the implications for helium users. This is like kind of the last slide that has any real new content. So this is kind of a summary, but we're in a strong buyer's market. I've made that clear. The helium market is currently experiencing oversupply. I would say this: the oversupply is not as bad as it might seem, because people, what I've experienced is people who do have surplus, like Iwatani as an example, has a pretty big surplus right now. They knock on 100 doors trying to sell their surplus. And if you've got 3 companies with a big surplus, each knocking on 100 doors, the customer is feeling, wow, there must be like a big glut of helium, because I'm getting people banging on my door desperate to sell me helium. So I don't think it's quite as much of an oversupply as it might seem to some buyers. But the supply, I went through the 3 scenarios. The baseline is that supply should be plentiful for an extended period. I'm not going to say oversupply, but plentiful. Prices should continue to moderate, at least in the near term, until we get a new equilibrium. If you're a buyer, you don't need to wait until your contract expires to ask for better pricing and terms. There's a little bit of art to that, but folks want to keep their customers. I would just say, I'm sure some of you in the room have already renegotiated your helium deals, hopefully. But if you haven't yet, you should be looking for opportunities to do it. While the timing is good, it's a great time to shop around. You shouldn't limit yourself to the helium majors or their distributors. You might be proactively approached by your supplier, especially if it's one of the majors, where they would offer to reduce your price in exchange for a contract extension or something like that, or maybe if you could buy more volume from them. That's kind of industrial gas 101. You try to renew your customers before their contract expires because you want to hold on to your customers. And that's fine. That might be the good way to go. I would just say that if you're in that situation, you should still check around, make sure that whatever you're offered is competitive, that it's in line with the market. And just when you're with any helium supply agreement, you want to be probably most careful with the price adjustment provisions. Like that's where you might fall into a situation where where you're vulnerable to price increases without being able to check the market or whatever. So that's the place to be most careful. All right, so that's my summary slide, which is kind of everything I just said. But there's, because of all the shortages and higher prices and emergence of Russia and sanctions and all that, it's driving significant structural changes to the helium business. And then the most important trends affecting the people in this room, it's a buyer's market. There's more people out there who are getting access to supply, who are potential suppliers to you. The oligopoly is not quite as able as it has been over the years to be bullies. I've spent most of my career on the bully side of this, so I know both sides of this pretty well. And you have all these exploration startups. So if you have not done so already, now's the time to try to reduce your costs and improve your terms while the market is in your favor. And again, I would say don't hesitate, because there could be a black swan event tomorrow. And even though there's an oversupply now, there might not be one tomorrow. So, you'd be kicking yourself if something happens, the market goes back into a tight situation and you missed your opportunity. Okay, so are there any questions? I will say this. Normally, this kind of presentation, I rush through it in kind of a half an hour. So this was kind of a luxury to not speed talk a little bit. And I took 45 minutes. It's kind of like a 45-minute presentation. Any questions? Joe?
1 second, Joe.
I was having a conversation earlier in the week with one of my suppliers, and one of the questions that came up was, how much money does it cost, just ballpark, when you talked about the storage for some of the majors and how they're able to store helium to kind of balance the pricing.
Mm-hmm.
How expensive is it to put the helium into the ground and then take it back out?
Putting it in and taking it out is not that expensive, but the investment for a storage cavern, my understanding is it's like $40 to $50 million. It's a big investment, and I don't really think that the majors want to store like billions of feet in the ground, because okay, so pick a number. Let's say if you looked at my chart and you said it's $400 a thousand, a billion feet would cost $400 million to put it in the ground, right? And then suppose prices drop to $300, you got a $100 million write-off that you're looking at. So it's risky to build a big inventory of a commodity that's in a falling market. So, to some degree, I mean, I do think the storage caverns are a good thing for smoothing out the swings in supply and demand. But part of the story is I've got this big take-or-pay with Qatar Energy, and I don't know who I'm gonna sell this helium to. I'm going to build a storage cavern and say, hey, this is great for whatever, but to some extent, it's kind of a desperate move because they're not able to meet their take-or-pay commitments with their supplier. Does everybody in the room know what I'm talking about with take-or-pay? That's a term that I threw out there. And okay, so most of these big contracts were like a Linde or a Messer would be buying from ExxonMobil or Qatar Energy. They're all take-or-pay contracts. Those contracts mean you're obligated to buy this much, and if you don't buy it, you got to pay for it anyway. It's a pretty severe kind of thing. So you can't miss a take-or-pay, basically. It's just not. You're going to take a big financial hit, and usually the companies find a way to not do that. But that's I don't know. If it's throughout the gas business, take-or-pay is kind of a pretty common thing.
Hey Phil, Nick Bertram with Michaels.
Hey, Nick.
You didn't mention hyperscale data centers for helium utilization. Is that still a potential risk factor to just demand as we go forward?
Well, when you mean a risk factor, you mean on the upside, right?
Yeah, everybody's
Yeah.
building data centers.
Yeah.
And
Okay, so
apparently
the
they need
the
helium.
data centers are the most of the growth, or a good portion of the growth that's expected in helium demand is from the chip industry, right? So all the AI shows up in the growth of the semiconductor demand. All right, so yeah, it is a hopefully a source of growth, and growth cures a lot of problems, right? And the helium producers and the helium industry, they're very much hoping that there's going to be better growth in the coming years than there has been in the recent years. Keith, you had a question?
Sure. Hey everyone, my name is Keith Ramsdale with American Compressed Gases. I'm a Tier 2 helium supplier. And my question is, you'd mentioned the fraying of the majors. Do you think that's more of a short-term trend based on the surplus of helium, or do you think that's more of a long-term industry change?
I think it's more of a long-term change. I mean, it's like, once you let the genie out of the bottle, it's hard to get him back in the bottle. If you've folks like you built a helium transfill, and other folks have purchased 11,000-gallon containers that cost around $1 million each. Once you have those containers, you're going to use them. Once you have a transfill, you're going to use them. So I think that to some degree, the helium majors, I mean, all these big companies, their management teams are under short-term pressure. Everybody's trying to hit their budget and earn their bonus and all that kind of stuff. So there was a lot of pressure to raise price and maximize the benefit, the profit from the shortage. But to some degree, you killed the goose that laid the golden egg. If you're a little too greedy, then you are encouraging new entrants into the business and things like that. And so I think these structural changes to the business are long-term, permanent kind of changes. It's still a strong oligopoly, but it's not as nearly as strong as it was.
Thank you.
Welcome.
Sorry.
Go ahead.
Annie Lane with Worthington Enterprises. We
Mhm.
manufacture the balloon time
Yep,
tanks.
I know you guys.
Yep. So question for you. If the use of helium and party balloons went away,
Mm-hmm.
what would the impact be on the tier 1 gas companies, the tier 2s, and or on the exploration opportunities for helium production?
Again,
If any.
during the shortage, where typically the majors, when they did their allocations, they said, well, okay, aerospace, they get 100% of what they need because it's critical. Semicon, they get 100% because they're good, high-priced customers and they buy a lot of stuff from us besides helium. Party balloons, you get 50% because we don't think you're critical. So during the shortages, if you went away, they would have probably all been happy. But there's oversupply now. They don't want you to go away. You're 15% of their market. What are they going to? They already have an oversupply. They don't want it to get worse. It would just end up lowering their price more and things like that. So I think your business is valued, and you probably were, I would say, treated less well than you should have been as an industry during the shortages. And again, to label any application or business as like non-critical, it's like, well, I don't know, is it non-critical to the family that depends on on that business for their livelihood? I mean, I think it's a little, I don't know. But bottom line is that they don't want your business to go away right now. There's plentiful supply. Your business is good business. It's appreciated.
Does it reduce the opportunity for them to make the investments they have lined up?
Yeah, I mean, when folks are trying to justify investments, they got to show what they're, who they're going to sell it to, and what price levels they think they're going to get, and what profit levels they're going to get. So yeah, it's all part of the equation.
Hi, everybody. Allison Dunning, Balloon Art by Merrymakers from Colorado. I have a statement and a question. You brought up Party City and the opportunities that it brought to smaller balloon companies. And I just want to, my statement is that it wasn't true for me. That doesn't mean it wasn't true for a lot of people, but what ended up happening with our Party City when it closed is people would call me last minute and go, I need a number 1 and 3 latex balloons. And that is not my business model. That's not what I do. I would send them to balloonplanet.com and have them order a big balloon bouquet, which I do offer. So I just want to make the statement that Party City, unfortunately, didn't help me very much. It actually created more chaos in my life than it did anything else. The other thing is that you brought up was, and this is a curiosity factor on my part as an end user of helium. My local supplier, the prices have not gone down. I just want to say that. Unfortunately, and only in the last year have I been able to get a full tank of helium from him. So I'm for profit, absolutely. But
Where are you located?
in Colorado.
Yeah, I mean, what I would say, and there's some people in this room you could talk to, but what I would say is, look up the gas and welding distributors who are, located more or less in your area, and reach out to them. And if your current supplier is playing hardball with you, then talk to somebody else.
Right. Well, that was my other thing. You mentioned Desert Eagle in Colorado. They don't supply to little people like me. They
No, not
they
that I'm
go
aware
to somebody who can transfer it into a canister.
You want to be looking at gas and welding distributors in your, let's say within probably a 50-mile radius of where you're located.
Okay.
And there's probably a few of them. And, your price should be lower now than it was in 2023.
Should be.
It should be.
There's the operative word right there. So
Yeah. Well, you have to find an alternative. If you just knock on your supplier's door and say lower my price, they're going to say, well, no, why should I? if you go there and say, well, you know, because I talked to 3 other people and they're willing to sell me helium for this, so, you know, I know you're taking advantage of me, and I want you to lower my price. Now, most people will not lower your price if, you know, unless you have a contractual shopping right or something like that. You're going to probably have to give them something in return, you know, more volume or a longer term or something like that, because, you know, they're not idiots for the most part. And, you know, the sales guy or whoever it is you're dealing with, he's going to go to his boss and say, so-and-so wants me to lower their price. Can I do it? And they're going to say, well, what are you getting in return for that? So, you know, you have to be, you have to go through the process. But there should be, I mean, I don't know exactly where in Colorado you're located, but there should be some competition, I would think.
It's more about awareness. I did not know.
Yeah.
I mean, on purpose, I'm sure he was keeping me in the dark. Not maliciously, but just,
Yeah.
if you're not educated, you don't know, right?
Mhm.
So
Yeah, absolutely.
I'm educated now.
Hi, Phil,
Yep.
over here. I want to go back to the Wellington question. If I heard it correctly, she mentioned that if the balloon business started going away, what would it do to the investors and so forth?
Mhm.
That brought my thought process is, why isn't more of those big 5 investing in this group or in lobbyists to make sure that balloons are not banned in some big states, because that's going to have a negative impact on their business. So we need to reach out.
Well, I think, Maria, you said that you were had a dialogue going with Lindy, I believe, and maybe others. They should be supportive.
Yeah, I think that's a great point, Billy, and we're definitely engaged. We've been talking to Lindy for some time, and they've reached out. So we're encouraged that they will likely become formal members here shortly.
But not just like for a membership, they should be investing in these studies that we're doing. They should be investing in money to the lobbyists. I mean, they do it in Washington. Why don't they invest it in our group?
Absolutely, and I think the first step is just being in dialogue with them to make sure that they understand that that is the need, and how it is we can partner together. So we're encouraged that at least we have dialogues opening up, and Lindy is just the first. We know we have several helium suppliers in the room today, and we have other conversations that are starting, and so we're optimistic this year that it'll look different next year at this time in terms of our engagement with that group. Good point. All right, well, any other questions? Okay, we're right on time. Thanks so much, Phil. Good conversation.